Hello and welcome to this very special edition of the Money Show, and today's show is a Diwali special where we are saying Ye Diwali Muskaan Wali, and with me is a very special guest. Please welcome Mihir Vora CIO Trust Mutual Fund. Mihir, welcome to the show, and first of all congratulations for this new role, our first interaction after you joining in. Ye Diwali Muskaan Wali, why is it a Muskaan Wali Diwali for you, if at all I had to know that reason? Obviously a new role and a new leadership position that you've taken up, but apart from that.
First of all, thank you for inviting me on the show, and wish you and your viewers a very happy Diwali.
To you too.
So, Muskaan Wali to on the personal front, because it's a new beginning for me.
Right.
I'm starting a new venture or job, whatever you call it.
Yeah.
And it's very exciting. Looking forward
Definitely.
for the next many years in this.
Yeah.
And second is that we don't realize, but we are actually, stock market point of view, we are actually in the middle of a dream run.
Why do you say that?
If you look at the history of the Sensex over the last 50 years, 40 years plus, since 1979, the maximum number of consecutive years in which the Sensex have gone up is 7. The winning streak for 7 consecutive years has not been broken yet, right? In 2023, we are in the 8th year of Sensex going positive. So if we end the year today, Sensex is about 6 to 7%, which means it will be 8 consecutive years of positive closing for the Sensex, which is a new record. So it's a dream run.
It's a dream run. Talking about entering a new Samvat now, apart from we having a dream run, what are the positives and negatives of the current scenario that we are taking in the new Samvat?
The positive are mostly domestic.
Great,
right?
Yeah, totally.
We did not overstimulate in the post-COVID scenario. So in 2020-21, unlike in the West, where they used all sorts of monetary and fiscal bazookas, we were more prudent, and we, I think, directed our efforts towards the weakest sections and created this medical infrastructure to handle the crisis, rather than just writing blank checks to the entire population, which they did in the US.
Right.
So while in the initial couple of years, so 2021-22, those economies did extremely well. True. Because there was free money being distributed to the people, and you saw what happened in consumption. And their recovery was much sharper. We did not go overboard. We did kind of the more prudent thing, which is focused efforts. And the aftermath of that is that we don't have any excesses in the system. So we are now building up to a normal cyclical recovery from the base of the COVID, and we have enough ammunition left to spend in case there are any unforeseen circumstances. So I think India as a whole is starting on a very much more sounder footing. So the domestics are positive.
Right.
Globally, they are now,
still have concerns,
it's a hangover, because now they can't stimulate anymore. Inflation because of spending has run very high, and they are in a tightening cycle, and inflation levels are at levels which they are not used to.
Totally.
So I think the local economy is much stronger than the global economy, and that's basically our premise for investments.
What about the headwinds coming from the geopolitical tensions and also the FII selling? You think that we are on a stronger grounds as far as DIs are concerned?
Certainly, 2 things. One is we can talk about the flows, which is the mutual fund flows, insurance, NPS and EPF money coming into the system, which is now forming a very good, solid monthly base for for the equity markets. And second is India's situation versus the rest of the world.
Right.
On a relative basis has never been better. So in the 2000s we used to talk about BRICS, Brazil, Russia, India, China. Now 2 of the BRICS are gone. Now it's only Brazil and India which are left. China is uninvestable. Russia has its own share of problems on the global scene. Nobody wants to put money there. So I think it's only Brazil and India which are large economies and growing very well.
True.
So I think the scarcity value of India is increasing, and that makes us relatively much more stronger. So yes, while we are seeing FII outflows over the last many months, and that's because of the sharp rate increases seen in the globe, in the US especially. But I think that's only temporary, because relatively speaking, for the next 3 to 5 years, India will continue to grow faster than the West for sure, and probably even faster than China.
So I also want to understand a global perspective, because you talk to a lot of foreign investors, you travel so much. What is the kind of sense and the mindset towards India, which could be a differentiating factor or maybe an aggressive and a bullish factor for India that you can sense?
Now, as I said, first and foremost is the fact that India is a credible and open democracy. There is rule of law, there is transparency, and we have been reasonably open on the current account and the capital account. So I think people's comfort with India has always been there. It's just
even as compared to China?
In terms of investable quality companies, all the time.
All the time,
But
okay.
it just so happens that China had grown for 10%, 9 to 10% for almost 15 years.
Right.
So the GDP growth that China was showing was amazing, much better than India for sure. That's why people's attention always used to be towards China. But now after 20 years, we realize that yes, while the Chinese GDP has grown by 4 times, the stock market is still at those levels. There's no value creation happening in the stock market.
True,
So I think you can fool some of the people some of the time, but you can't fool all the people all the time. And that's what
Actually,
people are realizing.
Right, right. So let's just go back a year back, last Diwali and this Diwali. Do you think what's the ratio between traders and investors? Do you think more investors coming in?
I think both are coming in.
Both are coming in?
If you look at the F&O volumes,
Yeah.
they are going up exponentially.
Yeah,
The number of demat accounts opened, the number of stock broking accounts opened every month, they are continuously, increasing. So obviously, a lot of traders are coming into the market, and I think technology is only aiding it further.
Totally.
Earlier, you used to have phones, then you have desktops, but now with mobiles, anybody with a phone is a trader now.
Right.
And you don't even need too much of margin money, etc.
Yeah, yeah.
Plus, the Jandan Aadhaar mobile combination has made it so easy to open an account.
Totally.
I mean, you don't need anything except for your mobile to open an
Right.
account. It's all paperless.
Right.
So I think the new set of traders and investors are coming into the market. But on the other hand, the long-term investors are also coming in,
Also coming
which we can see in the SIP numbers, the insurance flows.
Totally. So from insurance to AMC, okay, what's on your radar? And since you've taken the responsibility now from a fund house perspective, from an industry's perspective, what's on agenda? Like top 5 things to work on.
I would say insurance versus AMC. For me, the roles are similar
Yeah.
because it was always about managing money.
Totally.
The product structures are different, but
Different,
ultimately the same stocks, same
Yeah.
bonds,
Yeah.
same real estate, etc. So it's same but packaged differently. I
Yeah.
would say you still have to take the same fundamental calls, medium-term
Totally.
calls, and all those analysis, etc. But I think in terms of the mutual fund industry, there are 40 plus AMCs now out there, right? But there is always a scope for differentiation.
Right.
And I think what I bring to the table, what we as trust bring to the table, is very differentiated insight into the world of investing
Okay.
because of our combined wisdom.
Okay.
So the team that we are building is kind of top class, and we do believe that the kind of experience that we have will help us stand out in terms of our investment process and strategy.
So every AMC comes up with their own factor of themes, their own fundamentals and their values.
Correct.
So what trust has to offer? What kind of fund management team do you have? What are the kind of sectors and themes that you're following in the market now?
Sure. So we are not going to launch thematic funds. Our
okay.
first fund will probably be a diversified fund or a flexi cap kind of a mandate,
Okay.
where we can choose from all the market cap buckets, so to say. And we have people, we are building people, a team of people which
Okay.
are from the industry,
Okay.
both from the buy side as well as the sell side.
Right.
So we have people from the mutual fund industry, we have people from the investment banking and broking industry, but very experienced and very sharp people. And of course with my experience of building teams over so many years, I think we have a winning combination.
Talking about Diwali, it's also Shubh Shuruaat. Okay, so to the viewers, what are the kind of sectors you think can be a Shubh Kharidari or Shubh buy for this new year, new Samvat, Shubh Nivesh?
Shubh Nivesh. So I think first and foremost, the financials make a lot of sense because as we discussed, we are talking about the domestic economy doing better.
Right.
And in the last 5 years, what we have seen is that most of the growth in credit by banks or NBFCs has been on the retail side, whether it's mortgages or credit cards or personal loans or two-wheeler loans, four-wheeler loans. It's all been retail-led. Corporate India, after the shock of the late 2000s and the overinvestment and the NPA issues, corporate India had become conservative. So we have a situation where households, while they have been growing in terms of retail credit, they are still not over leveraged.
Okay.
Corporates are definitely not, large corporates are definitely not over leveraged. In fact, they have been cutting debt. And we have MSMEs which need money, right?
True.
So we haven't really seen the corporate cycle pick up. In the meantime, what has happened is because again of the shocks and the NBFC crisis that we saw in 2018-19, most of the banks and NBFCs have cleaned up their balance sheets, increased capital,
Okay.
tightened lending norms, and now are ready to grow. So if corporate credit picks up, which I do believe it will, then we have a situation in which retail is anyway growing, MSME is also growing, and the large corporate sector will also grow, which means that we are in for a good credit growth cycle for the next many years.
Okay.
And as I said, the banks and NBFCs are starting with a clean slate, and so they have the capacity to grow.
go on. All right.
The fight will be for the liabilities. So I think financials,
Right.
both banks and NBFCs, to start with, do make sense.
All right. All the investors who might be listening to you now and would just think of getting into the markets. One question that we are always asked is: should we enter equity through stocks, shares, or should we just enter via mutual funds? How can one decide that?
So that's a function of your skill set,
Okay.
your mindset.
What kind of skill set and what kind of mindset?
So your skill set, your mindset, and your time.
Okay.
Right.
Okay.
See, if you're building a portfolio of stocks on your own, you're not going to do it blindly. You'll have to do research. You'll have to look through the numbers. You'll have to look through the transcripts or the conference calls. Good thing is that these days lots of information is available out there. So
True.
you have company presentations, you have conference call transcripts,
Yeah.
you have the analyst reports also available widely. So data is not a problem.
It's not a problem.
Question is, do you have the time?
And
Because-
do you know what suits you and what doesn't?
Exactly. So I think if you have the time, well and good, you should do it as a hobby. But if you don't have the time, then leave it to the professionals.
Makes sense. Or maybe they can just keep watching ET now and also follow me on the streets. But then no, let's also talk about the festival of elections. Okay, that we are into
Yeah,
now,
of course.
and
Starting the state elections.
Exactly. So we have to consider a lot of factors. First, what is the market's choice? Okay, what is market's expectations? We are seeing a lot of freebies around happening, which usually we see during the election season comes up. The impact on food subsidy. How do you analyze all of this and the liquidity, that we'll be seeing flowing around?
Sure. So if you just step back and look at the backdrop of the coming elections in 2024, stock markets are doing well.
True.
Economy domestically is doing okay. I would say not too bad, especially compared to the rest of the world.
True.
So there is economically there is no major negative.
Okay.
But if you break it down a little more, the recovery post-COVID has been more on the higher end. It's been a kind of a K-shaped recovery, where the premium segments of consumption, the premium income level categories have done better in the recovery than the lower income segments, both
right.
urban lower income as well as the rural income, rural lower income and the rural poor. So this K-shape is something which is not sustainable.
Okay.
Of course, the hope is always that the higher segments grow so much that it pulls the lower segments along
True.
with it.
Okay.
But if that doesn't happen, then you need support in the meantime.
Okay.
So, given the fact that we are in for elections next year and the recovery on the rural side is still tentative, you can see some more support. We can call it populism or whatever, but there will be support for the masses because it's required first of all. And I think, given the way tax collections etc. are, we probably can afford it also.
Looking at this time of the festival, and also the kind of sluggishness in the demand that we are witnessing, your view on the overall earnings season, okay, and the expected demand during the festive season, do you think there will be something extraordinary or anything that will be worth highlighting that we can see?
So, first let's talk about the earnings season so far. It's been, as broadly speaking, at the index level, I think it's as per expectations.
Okay.
So you will not see major upgrades or major downgrades to overall earnings. But the trends have been, again, as expected. IT has been okay, but the guidance has been weaker than expected. FMCG, again, because of the mass consumption issues, FMCG results broadly have not been that great.
Exactly.
Banking and finance have done very well. And other segments, like some segments like automobile, discretionary, have done well. So it's been a mixed bag. Infra segment continues to do well. There is a lot of traction out there. Capex is happening both on the government side as well as the private sector side. So in investments, real estate, and some bits of consumption on the higher end is doing well.
Is doing well.
The lower end consumption and the globally linked sectors like IT not doing so well, including say commodities, metals, etc.
Okay. Okay.
That's been the
earnings
in
season
terms
part.
earnings breakdown. If you look at the expectations, I don't see any major negative or positive happening in this Diwali.
Okay.
If you look at the current broad trends, there is decent demand, but it's not like accelerating. So I don't see a major positive surprise as far as consumption is concerned. Hope is that the lower segment should pick up in the second half post the harvest, etc. If that
Exactly.
happens, then we should get the extra kicker on the economy.
Let's talk about your Diwali and your Shubh Nivesh and Shubh Kharidari. What's there on your shopping list for this Diwali?
See, we are always fully committed to equities, whether it's through mutual funds or direct stocks or ESOPs. So it's always we are always exposed to equities, and but broadly speaking, as I said, I would still continue to look at stocks across the spectrum. So flexi cap approach is better, I would say, because large caps offer valuation comfort. If you look at the index level, I think the Nifty is still at a reasonable valuation. It's not overshot, I would say. Mid cap and small caps do have some froth in valuations. Yeah,
okay.
of course. There's hardly been any correction, right? At the
Totally.
index level.
Yeah.
But the point is that all the exciting sectors and the high growth sectors are in the mid cap space.
Exactly.
Right? So you have to be a little more discerning than before.
Okay,
but
you can't go more heavy on these.
You would not go overboard, but I would not say there is no stock picks available.
Okay.
So I think you'll have to do a little more, put in a little more effort than before. It's not going to be as easy as last year.
Large caps very attractive now?
I think so, because we're expecting about 15% earnings growth.
Okay.
Large caps are trading at a historical PE of around 20 plus, which is not too bad. It's like about the long-term average. So with the long-term average valuations, improving ROEs, and a valuation which is kind of, and of course 15% earnings growth, it's not a bad risk-return trade-off.
So on a portfolio level, is it the time to rebalance and reshuffle your portfolio? Would you recommend that to the investors?
I mean, it depends on your starting point.
Sure.
If you are like 100% to small caps, probably you want to diversify away. But
Yeah.
otherwise, fine.
What's the frenzy about micro caps?
It's the same thing, right? Towards when, as I said, we've had a dream run.
Yeah.
This is the eighth year of positive returns from the large cap indices. So as the run matures, you will see people going down the risk curve, right? So first the large caps outperform, then the mid caps outperform. They become expensive. So first large caps became expensive. So last year we were actually advising people to be a little cautious on large caps, which worked out. So Nifty hasn't done too much in the last 18 months. If you look at the peak of 2022, the first quarter of 22, after that the Nifty is still positive, but not but the mid caps and small caps are caught up. So people will increase their risk appetite as the market sustains, which is dangerous because then you see a lot of people coming at the top.
Right.
But that's the nature of the market.
Right.
So the micro cap frenzy is because of that. It's because of this long bull run that we've seen.
Exactly.
People are going down the risk curve.
Exactly. But then how smart you should be, because a lot of people also have this FOMO thing, if at all. And the AMCs also have been launching specific micro cap products, okay, to just lure in the investors and just get on the train.
But a lot of fund managers also cautioning against.
Exactly. That was my point. What would you like to tell our investors?
See, I think, as I said, India has a wide variety of stocks to choose from.
Yeah.
And as I said, yes, there are pockets of froth, but that doesn't mean that everything is expensive. You should not, when you have 3,000 stocks which are in the mid and small cap space, you should not paint everything with the same brush.
Yeah, the universe is large.
Probably 3 years back, it was very easy to pick stocks because lots of stocks were available at good valuations. Now, much fewer stocks are available at attractive valuations, but that doesn't mean zero stocks are available.
Zero stocks are available, right. What was your first ever investment? Or let me just ask you this. Your first introduction with investment and, the day when you realized that, okay, savings is different and investment is different. What was that? Anything that you can share with us?
Oh, that's an interesting one. My first introduction to investment was through my uncle.
Okay.
Because I come from a very humble background. So we never had surpluses to invest. But my uncle used to have some money and he used to invest. So at that time in the 80s and 90s, there used to be a lot of IPO frenzy.
Okay.
Right. And so uncle used to apply through the IPO.
Okay.
And I used to fill up the application form for him.
Achha,
because
interesting.
he used to apply to multiple names, multiple applications and all those things. So I used to sit down and fill the application forms, and then I used to track the stocks how they are doing after the IPO, and then that's what said, okay,
you used to do that.
इसमें तो पैसा बनता है.
Right. So this was like a perfect learning for you.
Yes, physically filling forms.
So first investment was?
Oh, I don't really remember. Probably it was my own mutual fund.
Okay.
Yeah.
Okay.
Because in my first job, we started, we launched a first balanced fund.
Acha.
So and that's what for that I was the fund manager, so to say. So I think my first investment would have been that in the fund.
What mistakes in investments you think you might have done, which you might want to share with our viewers?
Mistakes typically have been, as you rightly mentioned, FOMO. So when you're younger, you tend to have a lot more FOMO.
Yeah.
But it's been a long career, so
Yeah.
I think now the FOMO is much lesser.
Okay.
So going with the herd, playing momentum all the time, that is something that was there in the early parts of the career, which actually worked very well, frankly speaking. I must say. But then when the crash happens, you get some sleepless nights, and then you start realizing whether it's all worth it.
How do you deal with that fear? I mean, initially, how did you do that? Now, obviously, you know what goes into all of this.
Correct.
But initially, when you were just learning about all these things, how did you tackle it?
So by making mistakes, frankly, by making mistakes. But one characteristic I always had is that I could stand my ground.
Okay.
So when I strongly
Conviction.
believed, when I strongly believed in something, I would act on it. So there have been times where I've been ruthless in selling when the markets turned. So probably I did not catch the top, but even 10% below or 15% below, I don't mind selling. Once I believe that the trend has turned. So that discipline I always had, because I always believe there's no point in looking back.
Right.
So just because the stock was 15 to 20% higher 5 days ago, doesn't mean you can't sell it now.
Right. So who's been your market guru? Your uncle?
No, that was just my starting point. But frankly, when we started in the mid-90s, there were not enough books available, frankly speaking. So whatever we learned is from our own experiences. And at that time, most of us, were freshers, and our mentors were also kind of maybe 4 years experience, not like 30 years experience, So we used to learn from each other. That was also the first boom of, first wave of foreign brokerage houses coming in.
Okay.
So we started getting research reports from foreign houses in the mid-90s.
Okay.
So we learned a lot from those kind of things also. But I think ultimately it's reading books and basically self-experience that's helped us. And I think the self-experience is irreplaceable, and I'm really grateful to the companies which put faith in such young fund managers and gave us money to manage in the early stage of our careers. You probably can't get it that easily now. You probably have to be an analyst for a few years before you start managing money.
Right. Last question to you. So, what is your life bucket list like? Okay, the items that have been ticked off and the items which are pending.
The never-ending item is travel.
Okay.
I just love to visit places.
So, how many countries so far?
I
You lost the count.
Well, I haven't been to the Australian subcontinent and the South American subcontinent.
Okay.
Continent rather. Otherwise, most of the continents, lots of things, but there are infinite things to do and infinite places to visit. So whatever free time I get, I travel with my family.
Okay.
And visit new places every vacation.
Okay.
So that's a never-ending bucket list, I would say.
Okay.
Otherwise, basic fitness and have a good night's sleep is I think the blessing that one can only ask for.
Yeah. A very important and a very reasonable bucket list also to have. All right. So to end the show, reason why our investors should have Ye Diwali Muskaan Wali. How would you like to wish them, and what would you like to wish them for?
Sure. So first of all, again, wishing all of you a very happy and prosperous Diwali and the new Samvat. In investments, there are two popular stages, which is buy and sell. But there's a third stage in the middle, which is hold. Buying is easy. Selling is also possible. It's not that complicated. It is the hold part which actually creates the maximum wealth, but which is the most difficult to implement. Because there you have to do nothing. So my request to investors is, whatever you do, do it for the long term and let your wealth multiply by holding it. Because you can only hold if you have faith and conviction in the long term of any market or stock that you are. So whether if you are in the mutual funds basket, then you have to have faith in the India story for the long term.
True.
If you're picking stocks individually, then you have to have faith in that company that you're invested in. But ultimately, long-term wealth and long-term compounding can only happen in the hold phase.
Right.
So be patient and be aware of what you're doing.
All right, with that, thank you so much for being on the show today, and it's a wrap for our viewers also. Wish you all a very happy Diwali. Thank you so much for watching. Goodbye.
Hello and good evening. Those were the headlines on News Now, and I'm Sumita Karir. As we step into a new Samvat, ET Now brings you a whole host of market insights to decode what's in store for the new year. So this Diwali, get ready, taiyar ho ke aiye, and stay tuned to ET Now for a very, very special programming season starting today. Let's begin the show then with a quick check first at the markets. After a week of choppy trade, Nifty managed to close at the green, staying above the 19,400 mark, and the gains were led by BPCL and Divi's Labs. Sensex 2 gained 150 points this week. In fact, sectorally, Pharma emerged as the top gainer, led by Aurobindo Pharma and Alkem Labs. Metals, realty and banks too advanced this week. In fact, PSU on the other hand was the top laggard, with Bank of Baroda and Indian Bank dragging the most. IT and media were the other sectors that closed in the red for the entire week. But Anisha, my colleague, is joining us now to get us a roundup of today's trading session and the key highlights this week. Anisha, take it away.
Well, it was a good close coming in for the Indian markets right ahead of Diwali. So we ended close to the highest point of the trading session, managed to scale up that 19,400 mark, and as a result for the week, the Nifty was higher by around 1%. In fact, mid-cap and small-cap managed to outperform yet again. The small-cap index was at record high level. A 4% gain is what we saw this week, and the mid-cap index too managed to gain almost 3%. Sectorally speaking, Pharma was definitely the flavor this week. So stocks like Lupin, Aurobindo Pharma, these were the high flyers. And then of course, real estate pack continued the up move as well. A Godrej Properties, a Sobha, a Prestige, a Brigade, these were the high flyers in the trading week. Metals as well as energy pack was also quite excited. It was only PSU banks that saw some profit booking, so that space was coming under pressure. And as a result of all of this, Nifty managed to advance for second week on a trot. Separately, if you look at the Friday's trading action, it was a good day because the last 30 minutes of trading session, we saw a bit of a pickup just ahead of that Diwali Muhurat trading. And sectorally, it was metals and energy that was doing okay. M&M was coming under a bit of pressure after its earnings. We also saw Hunasa consumer gain almost 6 to 7% post the Jeffries initiation. So very vibrant market by the end of the day because the first half of Friday was definitely very quiet and subdued.
All right, it's a good close for the Indian markets ahead of Diwali. However, festive cheer in the currency market seems amiss. Why? Well, the rupee has fallen to record low levels in line with the fall seen across Asian currency. In fact, the fall across the currency pack, Asian currency pack, is due to sharp rise in the US bonds. In fact, economists expect the rupee weakness to continue as concerns rise regarding the possibility of rate hikes by the US Fed. And moving on to some news from gold, well, a handsome 20% return in a single year and a whopping 90% return in a 5-year period. Gold prices have almost doubled since 2013. So, does it then make sense to buy gold this Dhanteras? Well, here's a quick note on various instruments available for buying gold in case you want to invest in some. My colleague Srishti is getting us this report.
Well, yes, it's Diwali and this is the auspicious time where people look out to make the investments and purchases in gold, because earlier it was the option of go ahead and buy the physical gold. Physical gold definitely has that emotional connect, especially in India, but it also involves making charges. There are risk of theft as well as it involves a storage cost. But now you have the golden opportunity in a lot of ways where there are plethora of options where you can go ahead and make investments in gold and actually get to trade on that as well. First of all, let's talk about sovereign gold bonds. Sovereign gold bonds, like the name suggests, is a bond that is being offered by the government, and the government actually comes in various tranches where you can go ahead and make the investments directly over there. And the major positive is that you just don't get the exposure to the gold, but you also get to have the interest of 2.5% on a fixed basis per annum, and this is being paid on a 6 months basis. The minimum investment is on 1 gram and the maximum you can buy in any financial year is of 4 kgs. Other than that, if we talk about, then it has a tenure period. This bond is actually of 8 years, but after 5 years you have the option of opting out of this particular bond. So this is the first way where you can go ahead and invest in gold. The other way is gold ETF, that is exchange traded funds. All you need is a demat account where you can go ahead and not just buy the gold ETF and get to trade on that. And lastly, there are a lot of fund houses that are coming up with gold funds. This includes asset management as well as brokerage fees. So these are the options where this Diwali you can go ahead and make the investments and purchases of gold.
Lots of options even for investing in gold. But moving on, Madhu Kela, market veteran, sees 4 key themes with tremendous growth playing out in the next 10 to 15 years. What are those themes? Well, listen into this excerpt.
So I'm saying from a 10-15 year perspective, I am working on 4 things.
Okay.
One, carbon neutrality.
Okay.
I think it's a very big theme in my opinion. And this is one theme which is coming. ये क्या है भगवा धीरे 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 आ रहा है तो we are not able to comprehend how big this trouble is, but in my opinion this trouble is very large and this is a survival trouble. So government, policy makers, business people, they will do everything possible. Now when I look at the broad trends, what is Mukesh Bhai doing, what is Gautam Bhai doing, what is Sajjan Jindal doing, what is Elon Musk doing, they are all doing something to solve this problem.
Yes.
Right? Yes. So that is one thing which is already in the works, but I think it will work in a more accelerated manner. Second, I think something meaningful changed in the world of artificial intelligence and AI last year when they really cracked it. Now, these are very early days where the destruction of wealth will happen and where the creation of wealth will happen because of artificial intelligence. So artificial intelligence in itself is not an investing opportunity, but the companies which are enabling themselves using artificial intelligence, getting their cost structure altered, getting the time significantly shortened. So there will be a lot of case studies, Nikunj, over the next 5-10 years of companies which will tremendously benefit. And also companies which will tremendously get hurt.
Of course.
So these are early days. We are started evaluating. We have put one dedicated resource only to track this. In my office, there is one dedicated resource, 24/7, only does this. Right?
Wow.
This is the second. Third, I think cyber security
Okay.
will be a very, very big business in times to come. We are already seeing, right, like, what is happening. AIMS Hospital, a small pharma company in Hyderabad having cyber attacks, right? These are things, and this is a $200 billion business worldwide. Name 5 companies which
That's
are
as
listed.
large as India's IT exports. India IT export is 250 billion and cyber security is 200 billion.
$200 billion worldwide.
Yes.
So this will happen. So this is the third point. Third, new technologies like biotechnology, where there will be some breakthrough movement, genes technology, but I don't understand too much. We are still studying, etc. But I think these are 4 pockets which I will bet on to identify some real winners for real long term.
All right, for Madhu Kela, it's energy transition, AI and cybersecurity, which are going to be the key themes to watch out for in the near future as far as investors are concerned, retail investors are concerned. But what does Prashant Jain, the director of 3P Investment Managers, thinks? Well, especially with respect to the banking space, well, he expects larger banks to see a re-rating. But where does he see this sector headed? Listen in to find this out.
If you look back, there was a clear divide between corporate and retail banks. And the corporate banks were suffering because of high corporate NPAs, and they got derated to absolutely low levels. And therefore, as a result, all the money crowded into the retail banks, and they became terribly expensive. A 4-time, 5-time price to book for a retail bank, it's a good bank, is very expensive because the ROEs are capped at the end of the day. But as the NPA cycle resolved and the real strength, the profitability of the corporate banks was evident, these banks have done extremely well. So you can see those banks have moved up 3 to 4x. So I think what has happened, that excess valuations in the retail banks, that has corrected, leading to underperformance. And this always happens because when there is scarcity of growth, growth becomes expensive. When growth becomes cheaper, available elsewhere, that excess is corrected. So I think that is what has played out, and that's why you will see the derating of the retail, erstwhile retail banks. I think today the valuations appear to be quite reasonable across, and the gap between corporate and retail banks has disappeared. The balance sheets are looking a lot similar to each other, and the valuations as well. But eventually what happens when there is no momentum in some space, markets can become less interested in that space and they may actually go below fair value also. So I think that could be playing out in some of those.
So next leg of the rally could be the classics, the HDFCs and perhaps the Kotaks which could come back?
See, I would say that big divide what you saw between these banks and the corporate banks, I don't think that is likely to reoccur. Because the businesses have become similar. The erstwhile retail banks have grown faster in corporate loans and corporate loan focused banks have grown much faster in retail loans. So I think these banks are quite close to each other. So I don't think that a big skew in valuations is likely. And who knows, to be honest, whether the next NPA challenge, whenever it is there 3, 5, 7 years down the line, whether it is in retail or it is in corporates.
That's Ace Investor Prashant Jain weighing in on the Indian banking space. But viewers, what's Diwali without some lip-smacking treats? We at TT Now have brought you one with a twist. Startup icons Vinita Singh of Sugar Cosmetics and Nitish Mithir Sen are here to battle it out in this special cookout edition. Let's find out whether the duo can pack a punch as they don the chef's hat and talk about their favorite food and recipe for success. Take a look.